My cousin and I got into an argument the other day. She is an avid stock investor. She's bought and sold many stocks and made money. I am the other believer of real estate. So I spend most of my money and my assets in real estate. So the two of us are trying to figure out which one is a better investment. Today I'm going to talk about the pros and cons of real estate investing versus stock investing. Which one works for you? I will let you decide. So full disclosure, I am a real estate agent and I also invest heavily in real estate. So I am today trying to be as unbiased as possible, but obviously I'm going to add a lot of my own thoughts and my own experience into the mix. I would love to hear your thoughts if you have invested in stocks and real estate. Which one works better for you and why? Drop me in the comment below. I'd love to hear your experience. So let's talk about how stocks have been performing over the last few decades. In this chart over here, we see that S&P 500 and S&P 500 index track the performance of the 500 largest companies here in the US. And since 1984 till present day, S&P 500 have gone up by about an average of 10.8%. If you take the current index to 38 years ago and average it out, we are seeing a 10.8% per year increase. And let's look at real estate, how real estate, especially real estate here in the Bay Area 5 County. And if we look at this chart over here, we see that Bay Area homes have grown by about an average. And again, we take the high and the low and then we average it out over the last 38 years. That's how we come up with the average price appreciation is about 7.8% here in the Bay Area. Let's keep in mind there's also inflation. Inflation means the rate of money that will lose value year over year because the cost of everything has gone up year over year. So since 1984, the average inflation is 2.8%. So if you have $100, let's say last year, this year at the inflation rate of 2.8%, your $100 became $97.20. So that's how inflation works. I hope that makes sense. Let's talk about the pros of stock investing. Obviously, stocks and real estate are two very different investing vehicles. Stocks is a lot easier to invest. It has a low entry point. Anybody with a couple $100, even $50 could probably buy a S&P index fund. Don't have to think about it. You could open an account very easily on many online platforms such as CharlesSchwab.com, Robinhood.com. I personally have bought and sold stocks on FirstTrade.com. So it's very easy to set up, very easy to purchase stocks and index fund, and many people prefer index fund because you don't have to think about it. Invest in the broad market, in the strongest companies here in the US. So that's a popular vehicle. So the ease of use, low entry, easy to set up, main advantages of stock investing. And it's also easy to exit. When you own stocks, you could easily sell it. Let's say if it has grown in value and I need the money for something else, I could just post sold. And if you sell it at market price, it will be sold immediately or sell the next day. So very easy to set up, very easy to exit. Real estate, on the other hand, is much harder to enter. Normally, you need to have saved up a good down payment. We're talking about 20% of the home value you want to save up in cash. So it's harder to get into real estate because you require a lot more money. And it's harder to exit because you can't just, find a buyer right away. There's a marketing period. You have to prepare your home. Usually it takes from the time you decide to sell your home, the preparation, the escrow process, and then for the home to be turned to change ownership, it usually takes about at least 2, sometimes 3 to 4 months. So time horizon is very different. Overall, real estate is much more expensive to get into. It's harder to get out of. And then it takes a lot more funds and a lot more research to get into real estate. So we talk about some of the advantages of stock investing and disadvantages of real estate. Let's talk about some of the pros of real estate investment. So when you invest in real estate, you are able to leverage a little bit more than stocks. Stocks, you kind of rely on the company and on how the company is run. And if you believe in the individual company, you obviously buy the individual stocks. If you don't want to do too much research on the individual company, you buy an index fund, which is typically recommended by wise investors. In real estate, you have a lot more control. You could buy a home that is in bad shape, renovate it, increase the home value, what we call put in sweat equity. So that's one way of leveraging. Also, when you buy real estate, you are putting down, most of the time, you put 20% of your own cash, but the appreciation is on the whole 100% of the asset value. So you are putting in 20% and the home as a whole grow in value. So that's a good way to leverage as well. Also, in real estate, especially if you get into rental properties, you could have cash flow. There's also various tax benefits you could enjoy. If this is a home that you live in as your primary home for at least 2 out of the last 5 years, you could take advantage of what we call the tax exclusion. As a married couple, you have up to $500,000 home appreciation that you don't have to pay any capital gain taxes on. While in stocks, mutual funds, and index funds, the gain will be subject to capital gain taxes. So that's something to kind of keep in mind, that there's significant tax benefits in real estate. Also, mortgage interest and property tax can offset income tax obligation here in California. You could defer up to $10,000 in income tax when you have mortgage interest that you're paying and property tax you're paying. Also, the other tax benefits is that you could take depreciation from your home. Depreciation is basically the home due to wear and tear in the tax law, that every year you could depreciate a portion of the home to offset some of the income that you have gained from the home. So depreciation is another leverage that you could have as a result of having real estate. For investment properties, you could do 1031 exchanges. A lot of times, if you hold a home long enough, you are probably seeing, a significant equity built on your home. And if this is a rental property, you could sell the home, use the money to buy another home, buy a replacement property, and the capital gain tax obligation is deferred until later, so that you could leverage through 1031 exchange. So there's a lot of ways to leverage in real estate, while those options are not available in stock investing. The other, I would say, a pro for real estate investing, and which would be considered a con for stock investing, is that your ability to control that asset. And it's your asset, while if you buy stock, it's somebody else's company. You are relying on other people, other management to manage the company, the future of it. You have to believe in their accounting. While in real estate, you are much more hands-on. You have a say on when you want to enter the market, when you want to exit the market. You have a say on how much you want to improve the property. And you have a say on whether or not to rent the property out. You have a say on how much improvement you want to do. So you definitely have a lot more control over real estate. So I know I'm biased, but for all of those reasons, I am someone who likes to renovate. I am someone who sees a property as a diamond in the rough, and then like to turn a dilapidated property into a diamond and gain, appreciation from it. So I am a little biased. I believe that real estate is a good, sound investment vehicle. Obviously, you need a lot more funds to do real estate investing. So let me know what your experiences are with stock investing and real estate investing. I'd love to hear your thoughts, and I'd love to hear you personally, how you define the pros and cons of either investment vehicles. Now you know more about the pros and cons of real estate investing versus stock investing. As you know, right now in July of 2022, we are experiencing some shift in the marketplace in both the investing vehicles, stocks and real estate. If you want to know how the market is changing for real estate, watch this video right here.